Hi, I'm Ruth Preedy, a Director in Global Accounting Consulting Services, and I'm joined today by Avni Mashru, who's the Real Estate Accounting Leader. And we're going to be talking to you about the latest changes to definition of a business, which is in IFRS 3. And those changes are effective from the 1st of January 2020, but you can early adopt them. So let's start at the beginning. Most important thing, what are the main changes?
So the big change that comes in with this amendment to IFRS 3 is the introduction of what we call the concentration test. And what that basically says is if all of the value of a transaction is concentrated either in a single asset or a collection of similar assets, then actually what you have is really an asset acquisition. And if you have an asset acquisition, you can just stop there. The other change that this amendment brings in is if you fail that test, or if you choose not to apply it, because you can choose not to apply it, the actual definition of the business has changed, and some of the guidance around what is a process, so the overall concept of business has not changed, but the definition around what might be a process in terms of a business, there's much more guidance around that and how you determine whether there's a substantive process.
Brilliant. So key sort of overall changes, we've got this optional concentration test, which is new and hopefully a quicker way to get out the standard if you can use it, and if not, the main framework, there's a bit more guidance around substantive process. So really this video is around real estate. We want to know the impact on the industries, and that's what you're here for. So is it going to impact real estate first off?
Yeah, absolutely. And I think the general sense is what we may well see is much more in the way of asset acquisitions than perhaps business combinations. So really the concentration test is definitely key for real estate. And the amendment actually helps us with a couple of examples that are real estate focused. So actually the very first example talks about an acquisition where it's an acquisition of 10 single family homes. And these are very similar family homes, and because all of the value of essentially what's been paid for that acquisition lies in the value of these 10 single family homes, that then is an asset acquisition. Now that is a much quicker assessment than perhaps what we have right now, is where we kind of go back and forth and assess the definition. So that is one example of where actually in real estate you could get asset acquisitions where you're getting similar assets being acquired.
So, but obviously it's still optional, you could choose not to, but a group of 10 almost identical things, you would say, is an asset acquisition. And we should bring out a point there that I just remembered. Another smaller change in the standard is they've deleted the section on like if a market participant can replicate things,
which
I think helps.
And so interestingly, moving on from that concentration test, the next example in the standard actually gives an example where, okay, you might acquire 10 single family homes, but you also acquire an office park. And that's a really interesting indication because it concludes in that sense that if you try to apply the concentration test, you would fail because you don't have similar assets, and then you move into the definition of a business. And as you say, helpfully we've kind of gotten rid of this, can a market participant replicate a process, and really looking at whether a process that's acquired is substantive. And here the standard makes definition or sort of difference between whether what you're acquiring is actually already producing outputs or if it's not yet producing outputs. And certainly for real estate, it is more common to have acquisitions where outputs are already being produced. And certainly the examples in the standard talk about properties that have tenants in place already, so what we refer to as in-place leases, so there's rental income already being generated. So if you go to the part of the standard that deals with a situation where you've already got outputs, you then have to look at the processes that you're acquiring, and again the example in the standard talks about you might be acquiring a maintenance contract and looking at that and saying, well, is that process critical to or containing kind of people who are critical to essentially producing these outputs? They've got the right necessary skills and knowledge, etc., to make these outputs kind of happen. And you would say, and certainly the example concludes, where you've just got a maintenance contract, well, that probably isn't critical. So it's a much, I say easier, I'm sure it's not going to be easy once we get into the judgments, but certainly we've taken away a bit of that uncertainty around, okay, is there a missing element? Rather now you're just looking at, okay, is this process substantive or is it not? And you have a business or don't have a business depending on the answer to that.
One thing I like about the new amendment is for all the industries that are most impacted, they've added illustrative examples, and it sort of builds up, so you work through the model. So although obviously everyone's fact pattern will be different, at least you can see roughly which one you're going to fit into and where the grey bits are.
Absolutely. Yeah, and like you say, you know, the real estate example builds. So once you get to the third example, we've now got an acquisition of the 10 single family homes, the office park, but now we've acquired some management, and we've acquired people who are focused kind of on the development activity, the tenant management, leasing activity, and that's where you then meet the definition of a business. So you say, in that case, I failed the concentration test, I then move into assessing the definition, and now I've acquired a substantive process because these people are quite critical.
One thing I think people don't realise is if you fail the concentration test, it doesn't mean you're automatically a business combination.
No, absolutely.
You still go through the main framework.
Yeah,
you could be an asset, but you just can't use the sort of easy way out.
And that's where the second example is quite useful in that way, where the concentration test was failed, but actually you still didn't meet the definition of a business because there wasn't a substantive process.
Brilliant. So really helpful. So we talked through, I think, the two big changes and the big impact on real estate. If people need more guidance, where should they be going?
PwC Inform, we've got lots of information on there, lots of different bits of guidance around IFRS 3 is the overall amendment, and then also some industry guidance around real estate and what it means specifically for that sector.
Brilliant. Thank you very much for joining us.